Welcome to the Mind for Success podcast, a space for heart-centered entrepreneurs to live in deep alignment with what matters most, overcome subconscious limitations, and shift their energy into an unstoppable force. Before we get started, take a deep breath, hit the subscribe button, and enjoy the show. Hello, and welcome back to the Mind for Success podcast. I am your host, Kimberly Lebbing, and I'm excited today about our host, our guest, Ryan Kimler. Ryan, I met recently, actually just a couple weeks ago. We met virtually, a friend introduced us, and then we met in person, and I just love what he does. I think you're going to get a lot of value out of it. He is a CFO for small businesses. So he's the founder of Net Profit CFO, and he helps business owners, entrepreneurs, and gives them guidance in regards to growing their business and making it profitable. So I'm not going to go into too much of that because I'm going to let him tell you about what he does himself. But welcome to the show, Ryan.
Thank you for having me today. I'm happy to be here. I'm excited for the show today.
Yeah, awesome. I would love to start off with, just kind of the why you do what you do and a little bit about, how you help people.
Sure,
And
absolutely.
a little bit about your journey.
Sure, absolutely. So as you probably shared in my intro, my background's in accounting and finance. I'm from around this area. I'm in the greater St. Louis area with you. And originally Central Illinois. I went to Illinois State. And then when I got done with school, I went and worked for a CPA firm. And our main client were small business owners. And we were doing, basic bookkeeping, general ledger accounting for them, basically leading them up to tax prep. And along the way, had several business owners, kind of ask or kind of say to me, hey, we really appreciate the work that you do. We like getting our financial reports. We like to see how our company is doing. And what would be really great would be if you could give us some advice on how we can make things better, how we can make things more profitable, how we could have more cash flow, more cash, more money in the bank. And at the time, very green in my career, had no idea where to start. And there was really nobody at the CPA firm that really had a great starting place either. So that really struck, kind of a nerve inside of me. And, here you've got business owners that their background's not in accounting or finance, and they really need help. And I spent the next 2 or 3 years, at the time being Central Illinois, a lot of trips to St. Louis, a lot of trips to Chicago, to get around mentors and people that really did know how to help small business owners from the financial side of things. And long story short, ended up moving on from the CPA firm and eventually started my own firm, found a handful of really good mentors that I learned from. And today, I really do what I love. I've found that there is not enough accounting and finance professionals out there that are really advising small business owners. There's too many of them go into the tax field, into the compliance world. And I love that side of things. I love what I do. And now I am full-time. I own the Net Profit CFO, and I really just advise business owners on their numbers. I do all the financial heavy lifting for them. So that their business can grow and grow profitably. And that's really where my passion is. So.
Yeah, I love it. And I'm imagining, I'm just thinking about my own story when I got started in business. Like, you're probably seeing a lot of people that are just like, they go out and do what they love to do or to start a business. And then the numbers for a lot of folks, I know this was my story, like it's just this thing back here you don't really want to pay attention to.
Yep.
And so,
absolutely.
Yeah. So tell us a little bit about how you help small businesses in that CFO role.
Sure. So as a CFO, we really have three jobs. And I think a lot of business owners, they think, probably not real sure about what a CFO does. And when you think of a CFO, you probably think of the big companies in the United States or in the world, right? The Googles, the Apples, the Coca-Colas, the Walmarts, all those sorts of companies, Home Depot, whoever, right? That, oh, well, it makes sense that they have a CFO because they're a big, huge, multi-million-dollar corporation. But really, a CFO's job boils down to three things. So number one, their job is to track revenue, profit, and cash flow. And then number two, their job is to analyze the strengths and weaknesses of the business from a financial perspective. And so then after we've completed that, then our third job is to really, use our financial expertise and propose corrective actions to the business owner so that numbers that are not working for the business can be turned around and start working for the business. And so even if you're a small business out there, right, and maybe you're doing $400,000 or $500,000 a year or $1 million a year, you can still greatly benefit from the work of a CFO. Like I said, they're really going to dive in and analyze your numbers, and then help you with the actions that need to happen in order to make the company stronger financially.
So important.
Yeah.
And I mean, I'm imagining, I don't know, I just hate dealing with the numbers. So I'm imagining that it's just a huge asset for people that don't want to deal with that part.
Absolutely.
To have that hand holding and help.
Absolutely. Yeah. I make things, I do my best to make things really simple, really straightforward, and really easy for the business owners that I work with. Typically, I'm doing several hours of work prior to our meeting prep. And then, for the business owner's time, I really only spend probably an hour with them. And, I boil everything down to a scoreboard. Typically it's got around 10 numbers on it that they really need to know. And that scoreboard's color coordinated, green, yellow, red. And usually there'll be a number or two that's in red that's not working for the business. And the owner and I, we will work together to build out an action plan on what needs to happen over the next 30 days in order to turn that number around, right? Which is going to directly impact the business. And so, when a business owner leaves a meeting with me, again, we usually meet for only about an hour because I know that business owners' time is important. And they leave with two very simple one-pagers. One of them is their scoreboard. It's got about 10 numbers on it so that you're not overwhelmed with numbers. And the other one is your action plan that really, points you in the right direction and gives you the best next steps that's important to work on in your business to really make big changes. So very, very simple.
Yeah, I love simple. Who doesn't love simple?
Yeah.
So I'm thinking, because of what you do, that mindset might come up, whether it's said or something that you notice. So let's talk a little bit about money mindset and maybe what you see.
Yeah, all the time. I think, most of my clients, when they come to me, there's a relationship that's built there, right? Either they've heard me on a podcast and they've heard me speak for a while, or maybe we've met face to face, or maybe you've seen me do some sort of presentation. But one of the, when I have a one-on-one and kind of go through the sales process, if that's what you want to call it, I always ask, my potential clients, what did you learn about money growing up, right? And what did your parents do with money? How did your parents handle money? Money habits in America, there's not a lot of financial education, in school or anything like that for most schools, I think. And so a lot of what we know about money and how we handle money, we really learn from our parents. And they don't, like, I guess from my experience and from talking with business owners and a lot of colleagues, it's really not a taught lesson, right? It's like your parents don't sit you down and teach you about money. It's really just observed, right? And so there can be some, especially as you're growing up as a kid and teenager and you start paying attention, there can really be some big misconceptions about money. And I think that leads to a lot of mindset challenges. The biggest place that I think that it shows up is usually in pricing. And most of the time, I talk to business owners that are afraid to move their price, right, or increase the price of their services. They're afraid that they'll lose clients, right? And most of the time, what I end up seeing happens is, the business owner will get started. It'll just be them, right? Very low overhead. They haven't scaled a business, right? And so they set the pricing that works for them, provides them a profit, provides them enough to live on. And then they want to grow their business. And so start making some hires, start investing in overhead. And all of a sudden, those low prices really catch up with them. And they haven't really factored in all of the things that they need to in order to adjust their pricing accordingly. And then, when I kind of come on the scene, usually one of the things that we'll do is we'll go through and we'll kind of look at the products and services, and we'll look at the profit that goes along with those products and services. And, sometimes I'll look at the overhead that's associated with a product, and I'll be like, look, Mr. Business Owner, if you want to continue to have this service, we need to charge X. And first thing out of their mouth is, there's no way that I could charge X for that. I'd be out of the marketplace, right? Like, nobody would pay me that, right? That's like one of the first things, which is completely a mindset holdup, right?
Right. Yeah. Yeah.
So then usually my challenge to them is, okay, well, let me ask you this. Have you priced anybody else in your marketplace? Right. And usually the answer to that is no. Right. And so their idea that, oh, well, I could never charge X, right? That's all in their head. That's all mindset related. And it's really not fact-based, right? There's really, and sometimes, like a business owner, like let's say they're charging $1,000 for a product and I want them to move it to $2,000. If they have a mentality that paying $2,000 for something is expensive, right? Then they're going to convey that to their customer when they have that sales conversation. And then the customer is going to think, oh, well, $2,000 is expensive, right? And so a lot of it, I think, they kind of set the train off the tracks before they even get started. And so sometimes a lot of those mindset issues we kind of have to dive into before we even get started. And for me, I probably have an advantage because there's no emotions in numbers, right? And so when I can go through and show a business owner, look, every time you sell one of these $1,000 products, you're only making $100, and that's not going to pay your bills, right? Then they can kind of see it and they kind of start to come around. And so I have a little bit of an advantage, I think, because I can just kind of show them the numbers and be like, look, this isn't working and it's not going to work, right? Unless you really ramp up the volume, which most of the time it's not possible because of capacity. So,
right.
Yeah.
So you're able to take the emotion out of it, which I could see where that could be definitely an advantage, because I know just working with people on mindset, I mean, money is a big thing. And like you said, I mean, it's tied to, did your parents say, oh, we can't afford that? We're poor. I mean, if you heard those kind of things growing up, I even heard, I'm reading a book right now, and she talks about if you were told that you had to clean your plate, like clean the plate, how that might relate to you may not be able to save.
Yep.
Because you can't, because you got to use it all up. Yep. Just like you do your plate, you got to clean your plate. So, and I know with working with the subconscious mind, what happens in one area shows up in another. So I love that you are able to take the emotion out of it and show people the real numbers, because I would imagine it would make it a little bit easier.
I certainly try to, right? And I certainly try to.
Yeah. So tell me a little bit about what are the biggest challenges that you see when you talk to people or when they're coming into you?
Yeah. Biggest one is it seems so pricing, which I just covered. And I kind of covered some of the reasons why. Second kind of the second thing behind that is typically around their staffing and payroll.
Mm.
And there are some, there's some mindset challenges there too, right? As far as, they have a lot of business owners kind of have a mindset of, well, I need to pay my people really, really, really well, right? And I need to really take care of them, right? And that's all good. And we also can't pay above market for the job that they're doing, right? Most of the time, there's a reason why there's a market rate. And that's because other business owners have, really had the experience of overpaying people and not having enough money for the company. And so payroll is typically a place where, we really have to run through the numbers and evaluate, what kind of returns, that person or that employee is bringing in. And, are they being paid accordingly for what they're bringing in? And again, I try to tie it all to the numbers. Let's take the emotion out of it, right? Because I know,
Right.
yes, you have a relationship with this employee, right? They've been around for 6 years, right? Or 7 years or 10 years or whatever it is, right? And I understand it's not just, they're not just a person to you. They're, you've got a relationship with them, right? It's not just a number. But at the end of the day, we've with the people that you're hiring, right? I mean, there's got to be a return. That's the purpose of hiring people for a business, right? Is that the business, does have, in order to live and survive and thrive, it's got to have a return on its labor.
Right. Yeah. I imagine that's probably really hard for some folks to
Yes.
do.
Yeah. And sometimes, especially, if they, have a really good relationship with somebody and they're really emotionally tied to somebody, maybe that person, because of that, gets away with not performing the way that they should.
Right.
And that ends up really affecting the company. And so then it comes down to like, what are the next steps that we need to do with this employee, right? To get things back in line. And, or, if we have to face, conversations of, hey, unfortunately, you hired too quickly and hired too much, and we're going to have to end up letting an employee or two go because of where you are, right? Those are really tough emotional mindset conversations. And, again, I try to take the emotion out of it and really just look at the numbers and look at production and all of that. And at the same time, you're not going to get all of the emotion out of it, right? Ultimately, if you're in that position, somebody's losing a job and that sucks. but
Right.
But that's, that's part of it.
It is. And I would imagine that would, I don't know, I just think it would be eye-opening of, okay, why did I just kind of some inner work, like, why did I hire this person in the first place? Like, why, and having that opportunity to be able to look at the why and be more intentional about future hires.
Yeah.
You don't keep making the same mistakes.
And again, I think some business owners, they get off on the wrong foot right away, right? And there's not a solid plan for the next hire. And okay, so I mean, let's just take a maybe a air conditioning and heating company, right? Let's say you're going to hire a technician, right? Okay, so we're going to hire this technician. What's the total compensation package? And how much do we expect that they can really bill for the company, right? What is the return that we're expecting? I think a lot of times those plans are just not worked through. And so, sometimes, hires are made and there's not a good plan on how the company is going to get a return on this employee and where it's going to come from. And just having a good plan to make that happen quickly just always isn't there. And then the company ends up suffering.
Yeah. All right. So, talking about that, I mean, it sounds like there's a lot of tracking that ought to be taking place. So what are some numbers that small businesses should be tracking?
Yeah. So payroll is a big one, right? And really look at, how much of how much of a percentage, right, is payroll or your labor of revenue, right, or of your total sales. I like to tell service-based businesses, at least, your labor should really be somewhere between 40 and 45% of your sales at the most. So, and that means, if you've got $1 million business, at most total payroll for the year, $450,000, right? And that includes the owner being on payroll as well, with a reasonable salary. Nothing crazy. Like I've got $1 million business and I'm paying myself $300,000, right?
Right.
Nothing like that. Reasonable salary, six figures is fine. There's nothing wrong with that. But reasonable salary. And in that payroll bucket, you really need to, it's not just wages, right? It's adding in your taxes, adding in employee benefits, 401k, healthcare, workers' comp insurance if you've got it, life insurance, policies if you're paying for those for employees, right? All of those things really go into the payroll bucket. Even if you're using a software to run payroll, right? Throw that into the payroll bucket, in my opinion. And all of that should really, again, not be more than 40 or 45% of your revenue. And so basically what that equates out to is every employee that you've got, whatever you're paying them, salary and benefits, you've got to get a minimum of a 2x return on, right? And most of your, like in an air conditioning HVAC company, all of your technicians, you've got to get more than a 2x return, right? Because you're going to have somebody that's in the office, probably an administrator, answering the phones, doing the billing, that sort of thing. And they are obviously not out working on, people's air conditioning units. So they're not a biller, right? So you're going to have administrative salaries. So most of your billers, you're really looking at a minimum of a 3x return to cover the administrative.
Yeah, that makes a lot of sense. So tell me how the net profit, like where should that be for businesses?
20-25%. Yeah.
I'm sorry.
20 to 25% at a minimum.
Okay.
Yeah. So, and that's where, payroll being 40 to 45%, is right in line. Right. And then I like to see, marketing and advertising spend usually be around 10% of revenue.
Okay.
And overhead is 20 to 25. So that's your other, office spaces, all those sort of things, right? Softwares, computer equipment, whatever, all that should be 20 to 25%. If you can get that bucket smaller, obviously you're just adding to your net income at the end, right?
Right.
So if you're in those windows, that should give you a net income of 20 to 25%. So in other words, if you're $1 million business, net income 250,000, right? And the big reason I say that, the big reason for that is after your net income, well, first of all, you're going to pay taxes on your net income. So then after that, you've got other capital investments that probably have to happen, right? If you've got to buy equipment, if you've got to buy vehicles, right? If you've got to buy maybe furniture for an office space, all of those purchases, if you've got debt in the business that you're working on paying down, all of those purchases and all of those items, they take up cash, but it's cash after profits. And so really, your net profit or your net income is the starting point for all of those purchases. And so you don't get down to, well, what's my net cash flow or what's the change at the bank level until you've started with your profit and you've got through all of those additional purchases or paying down debt, or if the owner takes out money as a distribution, that comes out of the cash bucket as well. So there's a lot of things that happen after your profits that really can affect your bank balance. And so if you don't have a strong net profit or net income, then most likely you won't have enough money to make it through those other purchases and transactions, and you'll end up with a smaller bank balance, right? And so A lot of times I've seen business owners that they have a small net income, might be 4, 5, 8%. And so they have a positive net income. They end up paying taxes and their bank balance gets smaller because they're servicing debt or something like that. Right. And so they'll start the year with $50,000 in the bank and they'll end the year with 40,000, even though they have a net income. Right. And you put a handful of those years together and all of a sudden you're out of money and you're out of business.
Right.
So
how often should somebody be looking at their numbers?
Yeah. So really monthly at a minimum.
Yeah.
I mean, if you're a small company, like, a couple 100,000 a year, you can probably get away with less frequent if your expenses are kind of staying the same. But as you're, getting into that 400,000 or 500,000, 600,000, $750,000, $1 million, looking at it monthly is really probably a minimum. And if you're really trying to scale and grow, probably more frequently, because your expenses are going to be going up, and having a good handle on that, making sure that you're in a good position cash flow wise, is really important.
Yeah, I could see that. So tell us a little bit about what it looks like if someone wants to hire you or would hire a CFO. What does that look like?
Sure. So at least for me, I'm going to have an initial meeting with the business owner, right? We're going to talk a bit about your business, where you want to be in the next few years financially. Probably talk about a couple of the areas that you believe is holding you back at the current phase that it's in. And then, I'm kind of going to judge and see if it's really a right fit for me to be able to help you. If not, at a minimum, I'll probably give you, some good direction and some good pointers to help you improve profits for where you are right now. So I call that my profit acceleration session. It's free. It's a short 20 or 30-minute meeting, right? If you are a really good fit to work with me and I believe that I can help you, then I will offer to do a free financial assessment on your business, which is a really good thing for the business owner and for the accountants that you're working with, just to get a second set of eyes or another set of eyes on all the numbers and make sure that everything's really good. No red flags. And that assessment is going to bring out even more opportunities to improve profits and cash flow. And then, so I'll get access, most likely to the books, wherever you're hosting those at, maybe QuickBooks or wherever. I'll do the assessment. It'll take me a couple of days to put together. And then I'll go through the assessment on, a summary call with the business owner. So we'll cover your numbers. And then I'll, put together a proposal of what I would be able to do in order to help your business. And then I just let the business owner make the decision. Either yes, I think this is a good idea and let's get started, or no, I'm not really ready to get started. And either way is, good with me. Yeah. Either way, the financial assessment's going to give the business owner some good direction and some good advice and a place to start, at least on, helping improve their situation.
Yeah. Right. And I would I'm just imagining most people probably don't look at this stuff to this degree, or they go and get their own help or, whatever. I mean, we talked a little bit about Profit First yesterday. I don't know if you want to open that can of worms or not, but
I can. I mean, I think, but first I would address, the financial assessment that I put together. I would say, probably 95% of the time I hear from business owners, I've never seen my numbers this way. Right. Yeah. Or this is really a different way for me to look at my numbers that I've never, really thought of or never really imagined or looked at. Right. It's a whole brand new angle at looking at everything.
Right. Right. I'm imagining this is like, I work with people and helping them, discover the blind spots of their, mind. And you are that for their finances because I'm imagining they probably haven't ever looked at a lot of these pieces.
Yes. Yeah, that is very, very true. It is usually very new to them. And yes, it is. I mean, sometimes we do find blind spots. I think, I do the financial assessments for free for business owners that are a good fit. at a bare minimum, we always end up leaving the financial assessment with at least $5,000 in found profits. I mean, it's just, you know, I mean, it's just, I don't know. It just is, right? I mean, you find that blind spot and, you know, good things happen. So,
Yeah.
So yeah, and then I guess, you know, I can address profit first as well. I know a lot of business owners, you know, kind of utilize that system. I don't love it. You know, I think it serves business owners to a point, but there are some serious flaws and there's some serious drawbacks to that system. You know, so a couple good things I would cover first. If you're a person and you've got bad spending habits, right? And you've got bad habits with money, maybe you learned from your parents and they were always, you know, spending and buying and being in debt and, you know, all that sort of thing. Profit First might be a good system for you, right? Because it is going to allocate your money. And if you really stick to it and run the plan, you know, it probably will help those bad spending habits. I mean, ultimately, that's kind of a Band-Aid for a bigger problem. Right. Ultimately,
right.
you really need to address that mindset issue, right? Hire Kimberly and go through that and address that issue, right? So that doesn't, you know, plague your business and your personal life. But it's probably, you know, it's probably a Band-Aid and it's going to help you for a while. The other thing that I really like about it is there are monies set aside for taxes, right? I talked about having a net income 20-25%. Profit First says set aside 15% of your revenue for taxes. I like that. And I like that idea. I like that system. That way business owners are not growing their business and then all of a sudden they get hit with a massive tax bill. Right.
Right.
So I do like that. A couple of things that are not so good. So one of them is, you know, it's called Profit First. And so as I kind of talked a little bit about before, it only maps money out to the profit section. And so if you're a company, and again, just going to go back HVAC, let's say you've got to buy a new truck for a technician to be in, and you've got to buy tools and all that sort of thing. Profit First is not going to calculate for you or tell you how to set aside money to buy that new truck. And so it takes money, again, that takes money after profits. And so it does not set business owners up, you know, that have to buy assets, in my opinion, very well, right? A different example is, let's say you just started a t-shirt shop, right? You've got to have the material, you've got to have the t-shirts, and let's just say you went out and for month one, you bought $5,000 worth of t-shirts with your own money. Well, if you run the Profit First system, there's no money set aside to build up a fund to buy more t-shirts. That's something that, you know, you as a business owner would kind of have to figure out on your own or get with a Profit First professional. And, you know, they would help you kind of figure out, okay, we need to set aside this much money so you can buy the next round of material, right? So that's not really great, right? If somebody was just blindly following the Profit First system, you put in $5,000, you bought the shirts, and when you get done with it, you're not going to have money to buy more shirts. So if you're following it blindly like that, that's not good. And then the one thing that is ugly, if you look at the book or you look at the table, you can Google the table. You know, Mike Michalowicz, who's the author of the book, he broke businesses down into revenue buckets, right? Into, you know, different kind of brackets. And if you look at that table, you know, when you have revenue, call that 100%. He started increasing as the brackets go up and the business gets bigger. He starts increasing the percentage allocation for operating expenses. And so if you're going to do that, you've only got 100% to work with. That means somewhere else you're going to sacrifice percentage points, right? You can't move up operating expenses and spend 110% of 100% of the dollars, right? You can't spend $1.10 when you have $1 in sales, right? So where does the cut end up coming from? Well, the cut ends up coming from owner's pay. So as a business owner, when you grow your business with Profit First, you end up taking a pay cut. Now, I would not be, you know, really opposed to it if the pay cut was not dramatic or was not significant. the real problem that I have with it is the pay cuts are, in my opinion, very significant and very dramatic. So just as an example, if you've got a business that's doing $490,000 a year, your total owner's compensation from that business is about $196,000 a year. When that business goes to a $510,000 business a year, you cross over a bracket, your owner's pay drops. And then the next year, like let's say 2022, you were 490. Let's say 2023, you're on pace to do 510. And so you're in that new bracket. Your total owner's pay would be about owner's compensation would be about $140K. So
that's quite a drop.
Yeah. I have yet to find a business owner that wants to take a $55,000 pay cut.
Yeah.
So, and to me, when that happens, then we've kind of defeated the whole purpose of the system, right? The whole purpose of the system is to ensure that business owners have profits for business owners that have bad money habits. And now we've given them a $55,000 pay cut in their personal life. Mm. Well, how well is a person with bad money habits going to handle a $55,000 pay cut in their personal life? If you ask me, probably pretty terribly. And if nothing changes and it ran that way for 2 or 3 years, probably bankruptcy, right? Is where that ends ultimately, right? Let's just be honest with it. So to me, that part, and the other thing I would say too is your compensation doesn't catch back up to that 190 or 195,000 until you reach $750,000 in sales.
Wow.
So it's not like it's not like I manipulated the numbers and I'm saying, oh, well, at 510, you take a $55,000 pay cut, but at 520, you're all the way caught up. No, it's $750,000. So, you're really talking almost doubling your business before you catch up compensation wise. And so following the profit first system with a steadily growing business, like let's say your business is growing at 5% every year, as an owner, that's going to put you on a compensation roller coaster, right? It's going to be up and down. And I would much, much, much rather see a business owner be on payroll, have it be reasonable. If you're a $500,000 business, maybe it's $120,000 a year, right? Or maybe it's 130 or whatever it is, right? 100,000, whatever it is, right? Keep that salary for many years to come, set your lifestyle to that salary. And then as your business does well and you hire me and we increase your profits, then you can take an additional distribution, right?
Yeah, right.
And then you can go take your family on vacation, right? Or put more money into your retirement or whatever it is. But I would much, much rather see a business owner set your salary, keep it consistent, keep it level, set your lifestyle there. Obviously if your business really, really declines, you would have to look at adjusting your lifestyle and adjusting that salary. So make sure that doesn't happen, but just keep things consistent. And I think that makes things a lot easier, a lot less stress.
Yeah. Yeah. Well, thank you for that, because I know that was a lot, but I just feel like other people, I know when we were talking just in a meeting, there was somebody else that was like, oh yeah, profit first. That's a good thing, right? And you're like, no. So yes. I appreciate it, because I think that's something that people need to hear. And like you said, maybe it's a good way to start out, but don't stay there.
Yes, I would definitely agree with that. If you are a young or a smaller business, maybe a new business, right? Maybe you're again like 100,000, 200,000, 300,000, right? You probably don't have the money set aside to hire some really good accounting and financial experts, right? If you're in that place, then I think, Profit First could help you as well, because it is a system that is, if you read the book, implement the system, it is pretty simple to run, right? It's really, just an envelope system for money, right?
Right.
But yeah, definitely as you grow and as you start jumping brackets, I could foresee business owners running into problems. So yeah, it has its place, but the problem that I have with it is the book and Profit First Professionals, they try to kind of fit a square peg into a round hole and apply it across the board as a blanket solution. And, for a lot of business owners, it's just not that blanket solution.
Right. Yeah.
Yeah.
Thank you for that. So, tell us the best way, because I got a lot of value from this, and I know our listeners will. What is the best way for people to connect with you?
Sure, absolutely. Best place to connect with me is simply netprofitcfo.com. I'm sure that website will be in the show notes as well.
It will.
Yeah, and I mean, you can find me on LinkedIn as well, but best place to connect with me is, like I said, netprofitcfo.com. I've got a link to my calendar. Again, if you want a profit acceleration session with me, again, it's a short 20 or 30-minute meeting. We're really just going to talk about your business and, how I might be able to help, or at least, point you in the right direction. Give you some advice if you're, not interested in really going down the long road and looking at working with me one-on-one. But yeah, Net Profit CFO, my calendar will be up in the right-hand corner. I believe it's a button, chat with Ryan or something like that. You can see my calendar and book a time with me.
Yeah. And we'll have that in the show notes as well. So
Sure.
I've got that. So we'll definitely have that. So people, all they have to do is click a link and schedule with you. And thank you for being on today and sharing so much of your knowledge. And I know this is going to be valuable for people to hear. I know people need to hear it. So if you're not following your numbers, you need to get into that a little bit and connect with Ryan, follow him. And if you feel like it's a fit, or that you want to check out what he does, connect with him about that free call.
Absolutely. Thank you very much for having me today. I appreciate taking the time, and I'm happy to share with your audience. It's my pleasure.
Thanks for being on today. And thank you to our listeners. If you loved this episode, please go and rate it for us, because it helps other people see it. And I appreciate it. Thank you so much. Thank you for listening today. I want to invite you to download my free guide at resources.kimberlylebbing.com/unlock. It's called Unlocking Your Authentic Self: 5 Key Steps to Identify and Overcome Hidden Limitations in Your Life and Business and Realize Your Highest Potential. Thank you again for listening today.